Dan, I just want to finish on the FX market because we have been focused on the yen, of course. We've seen policymakers at least try to step in to bolster the currency. That hasn't yet materialized. What do you think the Bank of Japan then needs to do at this point? Should they be stepping in to hike rates and at least support the undervaluation of the currency at this point? How do you see this materializing?
Sure. So Japan is really in an incredibly interesting economic moment, and I've been spending a lot of time in Japan over the last year, actually. And I would describe Japan as really on a very significant long-term transformation path, right? We had 30 years of very low inflation or deflation in some cases. And we've seen a very significant sort of policy shift both on the fiscal and the monetary side throughout that period. Right, on the monetary policy side, we had very low interest rates and an active use of the Bank of Japan's balance sheet. On the fiscal side, over the last decade, we've really seen a revolution in Japanese policymaking. Often called Abenomics, of course. But I think the real benefits of Abenomics are really only now starting to be shown, are only starting to show up now, and they're the result of many of the structural reforms, including corporate governance overhauls, that really took a long time to bear fruit. But now what we're seeing is much more dynamism in the real side of the Japanese economy. And that's reflected, of course, in the financial markets as well. And you've seen Japanese equity markets basically double over the last 2 years, for example. You've also seen the Bank of Japan start to move out of its very low interest rate regime that was in place for almost 3 decades and normalize policy. And so far, this process has been relatively smooth. Of course, as I mentioned, Japanese equities have been very strong. Inflation is still, modestly above target. And so I would expect a continued normalization, which I think over time is going to result in, a very nice equilibrium for the Japanese economy as it really moves from, this difficult 30-year period into, much more of a growth engine for the global economy.
So then do you expect the central bank to step in and further their tightening cycle or step in at some point?
I would expect the central bank to do what is necessary to achieve its mandate, which is, of course, to deliver on its inflation mandate while also being supportive of growth. And, increasingly, you've heard from Japanese policymakers that they're prepared to do what is necessary. I, of course, am not going to get ahead of them, but I'm very confident in the Bank of Japan's ability to steer the economy in a responsible fashion.